Good morning, friends. At the outset, let me welcome each and every one of you for the fast track webinar series, BIndAS. I'm sure all of you will have a question mark what this B stands for in BIndAS. I am sure by this time you would have understood what is the significance of the word, the letter B in the word called BIndAS. So it actually signifies a very important thing with respect to Indian accounting standard. So this is batch number 6, day 4, exclusively for ICAI certificate course on Indian accounting standards. Today we will be seeing two significant standards, one on 108, the other on 105. 108 is operating segments and 105 is about non-current assets held for sale and discontinued operations. So let me take to you slowly into this subject. And there has been a very good overwhelming response for this Pinnacle case studies session. Thank you very much, each and every one of you for joining this particular session. Maybe another few more seats, and I'm not taking maximum numbers. So there's a very few numbers only I am handling for this Pinnacle, and I'm sure in the past those who have attended, everybody have actually scored maximum marks. Maximum marks means above 60. It is even sometimes 70, and few of them have even crossed 80 also. Good. So with this, let me take you into the subject. 108 operating segment. There are a few interesting facts about 108. Friends, please focus your attention. In Sanskrit, there are 54 alphabets, and each letter has both sides. We call it as the Shiva and Shakti side of letter. So the masculine and feminine side. So therefore it is 108 alphabets. And they say there are 108 feelings also. 36 feelings relating to the past. Okay, I'm happy, I'm sad, like that. So 36 relating to the present and 36 related to the future. So there are 108 feelings. And most interestingly, the distance between Earth and Sun is 108 times the diameter of the Sun. Similarly, the distance between Earth and Moon is also 108 times the diameter of the Moon. So Sun diameter, Moon diameter, 108 times. So this 108 is a very special number, and they say there are 108 pressure points in the body, and that is we can activate. So actually cure many of the ailments or diseases. So there are traditional skills like Varmakalai, Adimurai, Ayurveda, Marmadi, where the 108 pressure points are sensitized, thereby the consciousness and flesh intersect will rejuvenate. So quite an interesting number. So I will take directly to, and of course in Hinduism, you have 108 Divya Desams. Okay, so we say the temples of Vishnu. Of course, not 108 is in Earth. There is one particular Divya Desam which is not in Earth also. Good. 108 is a disclosure standard. I repeat, it is a disclosure standard. It is very special. And for your information, I just want to share with you the standard itself directly. So this is your 108. If you look at this particular standard, it has 34 paras only, maximum. And this is one standard which doesn't start with objective. It doesn't start with objective. So generally, for example, please look at the 105 standard. 105 standard starts with the objective. It's more about classification, more about measurement. Okay, so but there are only two standards. Indian accounting standard, there are only two standards. It will start with core principle. So there is no objective. So what is the principle of this standard? And remember, generally objective is not in bold. Look at core principle, it is bold. So read this particular sentence as many times. Look at this, an entity must disclose, shall disclose information. So it doesn't start with recognition, identification. No, it starts with the disclosure to enable users of its financial statements to evaluate the nature and the financial effects of the business in which it engages, an economic environment in which it operates. Oh, very generic. Very generic. So they have to disclose to enable users. So what is my nature, my effect of my business? Please look at this. Business first. Business first. So in which it engages, the economic environment in which it operates. And for your information, the only this, especially 3-digit standards, 108, 101, 102, 103, 105, 10, this is 105. All these standards, there won't be definition as part of the standard, but definition will be an integral part of the standard. So that is why they would have given an appendix A. So even in operating segment also, you have a definition which is in appendix A. There is only a single definition. So we have 34 paras and we have only one definition, operating segment. The standard itself is defined. So what is operating segment? So please wait, I'll come to this. Okay. And let me first start with the question. Okay. This will be your first question. Now, in short, I'll just share with you some interesting the Tata Consultancy Services, TCS. Please look at this. This is segment information. Okay. So operating segments are defined as components of enterprise. Please look at this. So I just want to bring to your attention. Operating segment is a component, is one unit, is one vertical of an entity. So which has three parts. Okay. That engages in business activity whose operating results are regularly reviewed, for which discrete information is available. These are the 3 points, and I will focus on this 3 point one by one. Please wait. Okay. So I'll come to this particular paragraph. So operating segment is component of an enterprise. Okay. Now, please look at TCS components. Look at this. So this is your component. What are those components? This is total. The revenue is 1,91,754 crores. And they have divided into 5 segments. 1, 2, 3, 4, 5. Remainder is others. And that is what they have explained here also. The group has identified business segments, industry vertical. So to just explain it in simple terms. Okay, to simple terms. So I am now coming to the definition part again. That engages in business activities from which it may earn revenue and incur expenses, including revenue and expenses. So we have, thank you, Sampath Kumarji, for joining. Thank you very much. Now, we have with us that engages in business activities from which it may earn revenue and incur expenses. Now, I want to make one observation here. I am a startup entity. I am a startup company. And for the first 3 or 4 years, there is no revenue, but only incur expenses. I only incur expenses. Now, whether that will be a segment, that is why they use a word called May. And we are in May only. We are in May month only. Please understand, the word is called May. It is not earned revenue and incur expenses. Earned revenue and incur. So that is why they include a word called May. It should earn, it shall earn revenue and incur expenses. They have not mentioned. It may earn revenues and incur expenses. Someday revenue only will be there, expenses will not be there. Very good company. Only opposite will be there. Only incur expenses, no revenue. So including expenses and revenue relating to transaction with other components of the same entity. That means group company, inter branches, inter verticals. So revenue includes your transfer pricing among your verticals, okay, among your branches. So that is also to be included. So let me now take you to TCS once again. Where is TCS? Look at this. So what are those business segments? I'll come to this word business segment a little later. Banking, okay, and you have financial services. You have banking, financial services, and we call it as BFSI. Okay, so and manufacturing, retail and consumer business, communication, media and technology, life sciences and healthcare, others. Now, how do we classify this? This is where the real challenge is. Okay, so now I'm coming for the major part of the definition. Okay, now let me come to para number 19. Okay, come to para number 9. So this is para number 19. Look at 19. So now here, if you look at okay, TCS, how many verticals are there? 5 verticals. Okay. Now I'll show you JK tires. In JK tires, how many verticals are there? You know, there is a very interesting part. Now, if you look at the vertical with respect to JK tires, you know what they say? An operating segment. All operating segments are reviewed. The company has reportable segment based on geography only, not on business. Okay. So please understand, even in TCS, they are giving geography as well as business segment. Now, please look at this. This is business segment. They are also giving geography. So, America, okay. So, what do you call it as Europe? Look at this, Europe and Asia Pacific, India, Middle East. That also, so geographical segment also they give, and the business segment also they give. But look at JK. JK says reportable segment is only geography. It is a group strategy. These business units are engaged in developing, manufacturing, marketing, distribution of tires for each of the business unit. That's all. CODM. That's all. Now they are not giving business segment. Now look at this. There is no business segment at all. Okay, income recognized for a company. That's all. Over. So information about reportable segment. Inter-segment pricing is determined. So they are only giving with respect to the year-wise. So India, Mexico, others. Matter geography only they are giving. Now please understand, there are even Maruti. Let me take. This is Maruti. In Maruti, I'm taking you to Maruti. Come here. So in this is your segment. So the company is primarily in the business of manufacture, purchase of motor vehicle, the other activities. The income of these activities are not material in financial terms, but such activities come to significant generating demand. That's all. So the board, therefore, there is no reportable segment for the company. Very, very important. Very important. They are not giving the slice. Now, please understand, the moment you are giving the slice, you are exposing yourself to the competition. So, Indian accounting standard, please read the principle very clearly. Very, very sensitive standard. Very, I will say, sensitive and very dangerous standard. Okay. The moment you give information, there is a Shankar movie, okay, called Boys. In that, Senthil will say, there is a joker, okay, of course, he will come in the disguise of a Samia, okay. So there he will say, information is money, okay, information is money. So the moment you give information about my vertical, my strength is shown to the world. So therefore, there will be counter strategy. So that is why I showed you JK tires. JK tires are not giving, I'm sorry, I was giving you I was showing you what TCS I showed you. And I will also show you the Maruti Suzuki. Maruti, they are not giving anything. Now, look at Asian Paints. Look at Asian Paints. So, segment reporting. So, I'll take you to the segment. So, look at the various segments in. How about the segment reporting in Asian Paints? You'll be quite surprised. Quite surprised. Amazing segments. Look at this. Look at this. This is your reportable segment. Where is it? This is your segment. Segment reporting. Discount rate. Segment. Look at the segment. There are only two segments. What is it? Paints, home improvement, matter over. That's all. Now, which paint, which turnover, which is the strength, which is the weakness, nothing is mentioned. Look at this. Revenue from India, outside India. They only give this. And look at this. Paint to home improvement. Matter over. Out of 24,935 crores. Remember, Asian Paints is leader in paint industry. 58% of the Indian market is with Asian Paints. And they only give these two verticals. So now, please go into the subject. Look at this 19th part. Okay. Now, in case you have to give the vertical, so will you give how many verticals you will give? There may be a practical limit to the number of reportable segments. Although no limit is prescribed, the number of segments that are reportable increases about 10. Entity should consider whether a practical limit has been reached. So if it goes beyond 10, actually 10 segments itself is very big because each segment maybe 10% it will come. So if it is less than 10%, is it significant to say? So that is why 10 is, they say 10 is max. If it goes beyond 10, please check whether it is material. Whether it is, can you fix a practical limit? So therefore come to this question. Operating segments can be restricted to not more than 10 in the consolidated financial statement of any entity. Okay, can be restricted to not more than 10. So it is true or false? Okay, this is true or false? Can be restricted to not more than 10. True or false? So normally what you will say, it is true only. But I will say it is false. Why false? There is no precise limit has been determined. Entity should consider only. Can you give more than 10? Yes, you can give more than 10. That is what they say. If it increases about 10, entity should consider. I considered it and I found it is material. So therefore, I am giving 11 verticals. You can give. Nothing wrong in it. Okay. You want to expose yourself more. You want to give more information to the shareholder. You give. Nothing wrong. So therefore, it is false. Okay. Now come to the next question. And I'm now coming for, so this is 34. Come to this. Where geographical segment. Look at the geographical segment. About major customers. Information about major customers. So geographical segment is given in 33. Okay. Now, out of your thing, do you have any major customers? Now, who's a major customer? If revenue from transaction from a single external customer, not your group, is about 10%, then you have to give that. Now, I will show you Ashok Leyland's balance sheet. Quite, because Ashok Leyland is also having a lot of competitors. Okay. Now, look at Ashok Leyland's balance sheet, where how they are actually managing their chief operating. Look at this. Chief segment report. Accordingly, there is no reportable segment in terms of 108. Govinda. That's all. Okay. I'll show you their segments. And do they have any major customer? Okay. So segment reporting. Look at segment. So this is your segment reporting. So let me take you to the segment report. So it is here. So I'll just show you their segment report. It's here. Right of use. Segment report. Where is it? Sorry for that. I just missed that table. No, not a problem. I'll come to that. But here, segment. Let me show you. Segment related disclosure. Now, please look at this. The group operating segment is identified as business segment. That's all. So, what is there? Commercial vehicle, financial services. That's all the two. They are not giving the breakup. It's only, this is what they identified. Groups operating segment identified only this. Based on nature of product, risk, as per 108. I'm coming for that particular paragraph. How do you identify? Okay. Now, please look at the major customer. Look at the major. There is no major customer. The group segment based on geography. That's all. What they in India, outside India. Simple. Because you have Tata Motors, you have other very big competitors. So very, very sensitive to actually give this 108. I say 108 disclosures. If you want to give, if you give, it's a live wire. It's live wire. It is with the power, not with it's with megawatt. Hey, high tension wire. This 108 is high tension wire. Okay. So please understand. But Tata Consultancy Service, they have given this. But who are those customers? They are not given. Now let us say major customers. No single customer represent 10% or more. See, I will say Ashok Leyland has not also given this information. Even JK Tyres, they have not given this information. So there is a review board. I will just share with you. There is a Institute of Chartered Accountants of India. They have a financial reporting review board. Here, they review the financial statements, audit report and all, whether it complies with Indian accounting standard. Now, I will bring to your attention one very important definition with respect to this. Come to this. Actually, this operating segment has been defined in two places. Please look at this. This is a reportable segment. I'll come to that. Now, the operating segment is operating segment para 5. They have defined. And the same 3 paragraph is defined in Appendix A also. Same. Now, what is operating segment? That engages in business activity from which it may earn. Okay. And what is second? Whose operating results are regularly reviewed by entity CODM to make decisions. Who is CODM? Chief Operating Decision Maker. Now, here I want to bring to your kind attention the term CODM identifies a function, not necessarily a manager with a specific title. This is very important. Is there anybody, Gopal Krishna Raju, Chief Operating Decision Maker? Is anything such designation? Is a no. It is only a function, not a title. So now I'll show you very interestingly Tata Consultancy Services. The group CODM is the CEO, TCS or MD. But same look at Asian Paints. Look at Asian Paints. Who's the CODM? So segment reporting. These segments differ from who's the chief operating decision maker. So chief operating. Look at chief operating decision maker. Now, operating segments are reported in a manner with the internal reporting provided to the CODM of the company. CODM is responsible for resource. Now, who is CODM? You go to Asian Paint. This is Asian Paint. CODM, you call. Nobody will come. But your reporting is like this. But your TCS, they made it very clear. The group CODM is C1 MD. Now, I'll show you Maruti Suzuki. Now, here, the board of directors is the CODM. Maruti is a government company. And look at Ashok Leyland. Ashok Leyland also, they are to some extent, they are reasonable. Look at who chief operating. Chief operating. Now, who's the CODM? The board of directors has been identified as CODM. So, in TCS, the CODM is CEO. In Asian Paints, no CODM. It's only the term that we will report to CODM. Who is CODM? They have not mentioned. JK Tyre also they have not mentioned. Look at JK Tyre. Who chief operating? Who chief? All operating segments reviewed by the chief operating. That's all. Who is CODM had not been mentioned. So JK Tyre and maybe one more Asian Paints also nobody is giving. TCS they have given. HCL, HPCL. I'll just show you. This is HPCL, Chief Operating Decision Maker. Chief Operating Decision Maker. This is actually government company. This is actually Hindustan Petroleum. Okay. So Maruti Suzuki also, they say board of directors. Ashok Leyland board of directors. TCS, they say MD. But look at our what is it? Sorry, chief operating. Chairman is the chief operating decision maker. Periodically reviews. So HPCL are very clear. And look at HPCL's reportable segment. They don't have business segment. They only say reportable segment. So now I'm coming for the next important terminology. Okay. So which is called the reportable segment. Now coming to the para number 13. Come to the reportable segment. An entity shall report about each operating segment. Now, what is each operating segment? Come to 13. An entity shall report separately about an operating segment. What is that? Revenue including sales to external customers. Okay. Both sales to external and inter-segment is 10% or more of the combined revenue. So, revenue-wise. Now, please look at our TCS. TCS I'll take. Look at this. This is a revenue. Okay. What is this? 1 crore 91,794. What is 10% of that? 19,000. So it is banking financial services is above 10%. Okay. Now this is 10% or more of the combined revenue. An entity shall report separately information about operating. That means any of the following quantitative. Any. So revenue should be 10% or more, or the absolute amount of profit is 10% or more. 10% or more, the absolute profit or loss. Okay. Now look at the manufacturing. 1,91,750, but 10% is 19,000, but it's 18,000. But look at segment result. Segment result profit. 53,000 crores. 10% is 5,305. This is 5,602. So I satisfy the second criteria. So now come to the third one. This is 19,000. This is 30,000. Very good. So I satisfy revenue. Now next is 19,000. This is 31,000. This is 19,000. This is 20,000. Okay. So of course I also satisfy the segment profit criteria also. So here also above 5,300, above 5,300, above 5,300. So the remainder doesn't come within that vertical. Either it doesn't satisfy revenue or the absolute profit or loss. Of course, loss you leave it. So, or a combined assets. So this is where you will have the challenge to actually bring your attention. That means you need to do some exercise exclusively for this. Now, by doing this exercise, this anybody is going to appreciate. Very good. We are going to give you a shield. We are going to appreciate you. Nobody. But remember, this is more you give, you are exposing yourself. Less you give, people, for example, look at JK Tire. Okay. JK Tire business, they are not giving. Only geography. Okay. Asian Tires, they are also not. They say only paint and home improvement. Paint, home improvement. What you will understand from this? Look at Ashok Leyland. See, Ashok Leyland has so many fleet of vehicles. So Ashok Leyland, look at the fleet of vehicles and their names. Look at that. So they have Comet. So they have various types of vehicles, various names. Look at this. Dost. So many names are there. Ecomet. Okay. So you have Comet, Captain. Okay. Tipper. So many names are there. Okay. Steering. Look at this. How many models are there? Okay. So just imagine you try to give each and every vertical. That's it. Okay. Of course, internal management, they will know. That is why in Ashok Leyland or any manufacturing company for that matter, there will be a department called, there will be a vertical called costing and pricing. Costing and pricing. This costing and pricing department is very, very critical department. Very critical department. Because that only earns profit for the company. Because you have multiple products. Single product industry, you don't have this problem at all. Okay. For example, I'll just show you the single product industry. Like we have this glass company. Okay. So one very important company in Chennai, I don't remember. So that company, they are a single sugar company, single company, cement company. So let me take you to Ultratech. Okay, Ultratech Cement annual report. Please look at this. Look at their annual report. It's quite interesting. Their CODM, their results, I'll just take you to. Look at chief operating segment report. The chief operating decision maker to make decisions which discrete. That's all. Nobody is named here. Nobody is named. Okay. So segment reporting. Look at their segment. Let us see their segment. Look at that segment. Okay. The company has presented segment information, the consolidated. Accordingly, as per IndAS 108, no disclosure required to segments presented. So this is actually one of the paragraph. I just want to share with you. Okay. So look at consolidated. This is para number 4. If a financial report contains both consolidated of a parent as well as separate, segment information is only in consolidated. So that is why they don't give here. Okay. So I'll now take you to so look at this. This is consolidated. The group is exclusively engaged in cement and cement related products. So therefore, no reportable segment. Okay, no reportable segment. So meaning that there's only one product. So you cannot slice it. Okay. So they only give revenue from India, outside India. Revenue for external customers, non-current assets. That's all. That's how they give. And this is as per your para number 33. Simple. Okay. So now let me take you to some few questions. Okay. A major customer is defined as one providing revenue amounts to 10% or more. Okay. Of the combined revenue, internal and external of operating. Now, is it all operating? Okay, look at this 34. Please remember this 34, this 10%, this including internal? No. 10% or more entities revenue. If revenue from transfer single external customer. External customer. Okay. 10% or more combined revenue, internal and external. Wrong. Again false. Okay. 3B. So please understand. Now, as far as your this particular part is concerned, especially quantitative threshold, it can be 10% or more of the combined revenue, including internal, external. But with respect to a external customer, when you say it is 10% external, why you are again taking internal? It is meaning is there. So please understand this crux, this distinction very clearly. Okay. Now I'll come to this chief operating decision maker. Okay. Now I'll just take you to para number 9. Oh, sorry. Look at para 9. CODM. Now sometimes an operating segment as a segment manager. One vertical will have one head. That vertical, for a BFSI, we saw in TCS. He may have one segment manager and he is directly accountable to the CODM to discuss operating activities. The term segment manager identifies a function, not necessarily a manager, the specific same term. That function is only a function, not necessarily specific. So CODM is also identifies a function, not a title. Segment manager is only a function, not a title. So the term segment may identify not. The CODM also may be a segment manager for some operating segment. Sometimes the chief operating officer, MD, can be the segment manager for one vertical. He said, no, I will take care of this segment. Okay. Like for example, principal of a school will also take class, English. He will be an English teacher also. So same. So now answer this question. The CODM also may be a segment manager for some operating segment. A single manager may be the segment manager for more than one operating segment also. Single. Okay. So these are all, so that is item number 4. So it's a very, very important, I will say a standard, but I have a lot of points to share. But this is the operating segment definition. Okay, three conditions. Okay, all the 3 conditions has to be studied. That is what's called Tridev. Okay, good. So now I am taking you to 105. Okay, non-current assets held for sale and discontinued operations. Okay, 105. Now what is this? I'll just share with you an interesting balance sheet. Okay, look at this balance sheet. This is Hindustan Petroleum. This Hindustan Petroleum, I'm taking you to their balance sheet. Sorry, their balance sheet and P&L account. Look at their balance sheet and P&L. This is their balance sheet. Yes. Look at their balance sheet, guys. Yes. Yes. This is consolidated. Property, plant and equipment. Okay. Capital work in progress. Okay. Other intangible. Now, look at this current assets. In that, one separate line item is assets classified as held for sale or disposal. Yes, assets classified as held for sale. Separate line item. It is actually 59 crores 982.17 crores or 56,982.17 crores is property, plant and equipment. Out of this, 60.51 crores has been classified. Classified means it's already there somewhere. You just remove from that and show it as a separate line item. Okay, so now I'm bringing it to your kind attention. This 105, okay, is a dodecahedral number. Dodecahedral means it is 5n square minus 4n. Okay, you can just put some number here. Okay, it will satisfy. 105 is a proxy. It is even in companies that 105 section refers to proxies, and this is the proxy. This is a proxy. Assets held as assets class held as this is the proxy for this, because this has come from here only. Okay, good. So these are some unique thing about this. I'll come to this case studies so that you will understand what this is all about. Okay. Now please come to 105. Okay, 105. Now I'll bring your attention to this objective. What is the purpose of this IndAS? Is to specify the accounting for assets held for sale. What is held for sale? Assets held for sale. That means you are going to sell that asset. Now, which are those assets you will held for sale? For example, you have a machinery. The life of the machinery is when you bought it is 7 years. Now 5 years is over, and you believe that machinery has served you better. So you bought a new machine and replaced that machine. Now, what will happen to this old machine? Even though some life is there, it has some value in the market. So you want to sell the machine. So that means it is retired from active use. The moment it is retired from active use, you are not going to show it in PPE. You have to classify it as an asset held for sale. And can you depreciate that asset? No, because you are classified held for sale. So this particular 60.1 will not be depreciated. It will be classified in current assets, not in non-current assets. Because immediately. Okay, good. So that is why held for sale or disposed. Okay, good. So now let me and the presentation and disclosure of discontinued operations. Okay, discontinued operations. I'll just share with you. There are some profit and loss account which has this discontinued operations also. I'll just show you one or two balance sheets which has this discontinued operations. Okay, so especially when you have a continued operations, what will be the profit and loss from that continued operations? So the discontinued operations means you stop your operations, but activities are going on. Okay, maybe it's only stock will be there, you will sell the stock. Expenses will not be there. Or you're only doing the cleaning up work, so there will be only expenditure will be there. So there will be a minus. So a discontinued operation, so you have some 7 verticals. 6 is operating, 7th vertical is inoperative. So it is discontinued. So until it is disposed. So please look at the asset held for sale shows separately, and the operating activity shows separately in your P&L account. Okay. So I'll just show you the Schedule 3 also. Look at Schedule 3 of Companies Act. Okay. So this Schedule 3 of Companies Act, I just want to share with you that profit and loss account part alone. Okay, I'm sure all of you are aware about it, where you will have a separate line item for discontinued operation. That means that has to be shown separately. Okay. So this is your P&L item. So balance sheet is over. This is your, oh, sorry. So schedule 3, profit and loss. I'll show you the profit and loss. So this is your schedule 3, profit and loss. I'll just show you anyone. So this is your P&L format. Yes, statement of profit and loss. Okay. Now you have this separate line item. So revenue from operations, operating activity. So now come here. So profit and loss. Okay. So now you have profit and loss for the continuing operations, profit and loss from discontinuing operations. Okay. So profit and loss discontinuing, tax for the discontinuing, profit and loss from discontinuing after tax. So this is profit before tax, tax expense. So profit or loss for the period from continuing operations after tax. So this 3 is discontinuing operations and profit or loss. So this is your item number 11 and item number 14. So continuing operations, discontinuing operations. So, and discontinuing operations, your profit and loss separately, assets separately also. Separate, it's just separate. Okay. In particular, this IndAS requires assets that meet the criteria to be classified. No, how will you classify it? So again, it is the classification and disclosure. Okay, so classification and disclosure. So assets that meet the criteria to be classified as held for sale, and you have to measure it, because what will happen, this particular balance sheet which I showed you, where is this? I want to share with you the balance sheet. This is Maruti. This is Maruti Suzuki. Okay. So you don't have a discontinuing operations. Even JK also, you don't have a discontinuing. I had another balance sheet. Sorry, I forgot to bring it here. Look at this. This is your balance sheet of JK type. This is the balance sheet of JK. Okay. So and I had another Ashok Leyland's balance sheet also. Okay, so this is your Ashok Leyland's balance sheet. Yes. No. So this is your balance sheet. I'll just take only one. Consolidated cash flows. Yes. Consolidated P&L. Okay. So that's it. So here also you don't have the. I had one balance sheet which I think I didn't open it up. So where is this? Oh, nevertheless, I'll show you later. I'll share it in my blog. Okay, I'll share it in my blog. So now let me come to the questions directly. Okay, good. So where am I? Yes. Now look at this question. Now let us take the first question to understand what it is. So one is asset that meet the criteria to be classified as held for sale, and then you have to measure it. This is where the challenge is. At the lower of the carrying amount and fair value less cost to sell and depreciation on such assets to cease. Okay. Lower of the carrying amount and fair value to cost to sell. Now, this is one place where you will have a challenge. You will have a challenge. Now, what is carrying amount? Book value. Okay, book value. And fair value less cost to sell. Now here, they have brought one separate amendment. Okay, one separate amendment. For example, your book value is 30 crores. Machinery, some 7 machineries you have retired. The book value is 30 crores. The market value, that is fair value less disposal, cost to disposal, cost to sell, it is actually 2 crores. So 30 minus, fair value is 25 crores, minus 2 crores is disposal, so 23 crores. So your carrying amount is 30, Fair value less cost to sell is 23. Now you have to bring down to 23. So lower off. It can be measured. So the difference between 30 and 23, 7, you have to write it down. Okay. It is equivalent to impairment. It is equivalent to impairment because the same concept is there in impairment also. But in impairment, there is one more concept is there. That concept which is there in impairment was not there in discontinued operation, which they have amended recently. I'm just going to show you that. So what is that? Look at 12. The editorial correction notified on 18th June 2021. All this silently they have brought this amendment during the COVID time. Okay. Recoverable amount. So recoverable. So this word is a very important word. Now look at this. Look at this. An entity shall classify a non-current asset as held for sale if its carrying amount will be recovered principally through sale transaction rather than through use. Okay. So now it will be recovered. Now I want to bring to your kind attention para 27. Para 27, look at this 8. Okay. So this is, they have amended recently. What is it? If the non-current cash generating is recovered amount is the carrying amount that would have been recognized after the allocation of any impairment loss arising on cash generating. This was the old paragraph. Now they have replaced with this new paragraph. So this can be an exam question. Okay, this can be an exam question. Now I want to bring to your kind attention one question for that. Okay. So look at this question, guys. Sorry. So I'll just take you to this question. Look at this. Oh, sorry. Recoverable amount. So as per IndAS 105, what is recoverable amount? Because this terminology was not there previously. So I'll just bring before you both this. Now, the entity shall measure a non-current asset, okay, or disposal group. Now, please understand the difference between non-current asset or disposal group. Now, what is disposal group? Just now I was referring to discontinued operations. Now you have 7 business verticals. One business vertical is discontinued. That means the entire assets, okay, entire assets are retired from use. So that is why it is called group, disposal group. So now non-current asset means out of your routine 700 machineries, 10 machineries are retired from use. So then that alone you remove from the plant and machinery, put it in asset held for sale. Now what if the entire business itself is you are going to dispose? Like for example, as a going concern, somebody who is a startup, they don't want to invest in new machineries. So already these machines are there running, and I am going for maybe that business I have actually transferred to the other thing, and I will sell it to somebody. So add some consideration. So that is why that is called disposal group. That cease to be classified as held for sale or as held for distribution to owners, or ceases to be included as a disposal classified as held for sale at the lower of its carrying amount before the asset was classified as held for sale, held for is recovered among the date of subsequent decision not to sell. Actually 27 is reverse. Decision 1, you decide to classify it as held for sale. Again, after 1 year later, nobody is coming to buy. So again, what you will say? Okay, myself, I will again use this asset. So then what to do? So that is why this recoverable amount at the time of subsequent decision not to sell has come. Okay. So when you want to sell the asset, lower of carrying amount or fair value less cost to sell. But when you decide that you will use the asset again, that means from the asset which is classified as held to sale, it will again go to asset. At that time, it is not lower, it is higher. This recoverable amount is defined. Oh, so come to the recoverable amount. So, carrying amount or fair value less cost to sell when you decide to retire. Okay, recoverable amount is fair value less cost to sell, and its value in use, because you are going to use it, whichever is higher. So then you will again reclassify it to an asset and then start depreciating from that particular date. So that is very important. So now answer this question. So as per IndAS 105, recoverable amount means, fair value less cost to sell, value in use, either ARB, lower of ARB, higher of ARB. So 10E. Okay. Now, yesterday we discussed this. Possible, probable, definite, impossible, improbable. Actually, this is in IndAS 37. That is with respect to your provisions, contingent asset and contingent liability. Okay. But the definition of this word probable, highly probable, okay, possible, impossible, okay. So they use this word called highly probable. Whenever there's a firm purchase, all these terminologies slowly I will introduce. So that is why this term is very, very critical, and this is an exam question also. Okay. So as per IndAS 105, probable means, okay, we already know. Possible means 1 to 100. Probable means close to 100. Okay. Impossible means 0. Okay. Definite means 100. Okay. So then probable means close to 100. So not likely to happen means close to 0. That might happen, but is not certain. Or then it is possible. Actually, the C is the definition for possible. Significantly more likely than not. So you have to understand. Actually, A and B are very close to probable. Okay. Now, in the word probable, there is one more definition called highly probable. Please look at this. Highly probable. Significantly more likely. Look at these two words. More likely, significantly more. Significantly more likely, highly probable. That means 95%, 99%. More likely means probable. It may happen. Okay. So I'm not using the word called possible. So whenever may or may not, okay. So then I use the word called possible. It may happen. That is a more likely it will happen. So I will use the word called probable. So answer is A. So 9A. Okay. Good. So now I will take you to another very important paragraph with respect to the measurement. So I'll take you to the case study, especially case study 1. On 1st November 2013, a company which prepares financial statements on 31st March classified as a non-current asset held for sale. Okay, 1st November. Now I'll take you to para number. Okay. This is a para number. How do you do this? Look at this. So an entity shall measure a non-current asset at the lower of carrying amount less cost to sell. We already know this. Okay. Now only when you're reclassifying it as a regular asset, higher will come. Okay. When you're classifying it as held for sale, lower only. Okay. Now come to this initial classification. Okay. So immediately before the initial classification, the carrying amount of the asset shall be measured in accordance with the applicable IndAS. Okay. That means what? You have to depreciate. For example, 1st November means if 31st March 2013 is your closing balance. From 1st April 2013 to 30th October 2013, you have to depreciate it. Because from 1st November 2013, you will not depreciate. That is what this paragraph means. Now come to 19. On subsequent remeasurement of a disposal group, that is with respect to disposal group. Okay. Now come to the impairment. An entity shall recognize an impairment loss for the initial or subsequent right. Now, what do you mean by that? For example, if the carrying amount is 30 crores and the fair value less cost to sell is 23 crores, the difference between 23 and 30, 7 will be treated as an impairment loss because you depreciate it and bring it to a carrying amount, and carrying amount and the fair value is less than carrying amount. So therefore, bring it down. Okay. Now, the asset's carrying amount is 40,000 and its fair value is 35. That means 5,000 what you have to do? Write off as impairment loss. The asset is still held on 31st March when its fair value less cost to sell is 27,500. Oh, so from 35 it has become So 40 to 35, 5,000 is impairment. 35 again, it has come down to 27,500 because 3-4 months you are not selling. So 7,500 loss. What is the impairment that should be recognized? So on 1st November, you have to recognize 5,000 impairment. On 31st March, you have to recognize 7,500 as impairment. Okay. So which is the right answer? On 1st November, 5,000. 31st March, 7,500. So it is answer is C. Okay. So please understand. So this is the application for your 18, 19 and 20 para. Okay. Now I'll take one more question. Okay. Now, non-current asset held for sale and discontinued operation. When can a non-current asset be classified as held for sale? When? So what is it? Should you have to do only at year end? Okay. Not necessary. Okay. So I'll just share with you the various conditions. An entity shall classify a non-current asset held for sale. Following conditions are met. All these conditions you have to satisfy. Okay. The following. Its carrying amount will be recovered principally through sale rather than use. So I'm not going to use it. I'm going to sell it. So this is the first step for classification. Okay. So I'll just take you to para number 6 here. Look at para 6. An entity shall classify only because I'm going to use. It is only from use. I'm not going to use. I'm only going to sell. If I'm going to use, then depreciation. Okay, good. The sale should be expected as a completed sale within 1 year. This is where the challenge is. Okay. So now look at this 1 year. Okay, I'll just take you to. For this to be, the asset must be available for immediate sale. That is why the use of the highly probable. Highly probable means you have a firm commitment. Okay, the word highly probable is actually defined. Why the word highly probable is defined? Look at highly probable. Highly probable means you have a firm commitment, purchase commitment. Okay. So what is a firm purchase commitment? You have an agreement. No, I will buy this asset because I am under. Okay. So now where is it? Where is the conditions? The condition is here. Yes. I'm here. Yeah. So you have a for this, the asset must be available immediate sale in its present condition, and the sale must be highly probable. So an asset cannot be classified as a non-current asset. The entity intends to sell in a distant future. Now, what is the distant future? 3 years later, I will use it. I will sell it. Then can you classify asset held for sale? No. Then you have to depreciate it. Okay. And maybe it is highly probable and you are going to sell immediately next 12 months. So that is why now look at this balance sheet of Hindustan. This is your Hindustan. Where is it? This is where Asian Paints. This is your Hindustan. This is Hindustan Petroleum. So here, asset held for sale or disposal. So what I will do, held for sale, I'll again. Look at this, held for sale. Held for sale. So non-current assets are classified as held for sale. Be recovered through a sale transaction rather than condition. This condition is regarded meant only when the sale is highly probable. And it will be done. They don't say within 1 year because they don't have a firm commitment. Okay. They only say it is highly probable. Okay. So non-current assets held for sale are measured at lower of carrying amount and fair value. And property, plant and equipment classified held are not depreciated or amortized. It is shown separately. You have to classify to separately show it as a separate line item that in disclosure part it is given. Okay. Now, I want to make one more observation. An asset that is proposed to be abandoned shall not be classified as held for sale. Abandoned means you don't have a sale value at all. So then what to do? Then you will totally write it off from your books. Okay. It is called abandoned. So only when it is ready for sale, you will do it. Okay. So guys, I must appreciate all your patience. And before I request Mr. Sampath Ji to share his thoughts, may I request a few of the participants to raise your hand to share your thoughts, please. I request Prem Chandran to unmute and share your thoughts. Durga Prasad, Kushbu Bandari. Then we have Lavanya. Then Lakshmi Rohini. M.S. Ramanathan. Yes. Tabu Augustine. Yes, please. So wish to listen to you, Mr. Sanjay. V. Sridhar. R. Darini. T.V. Subramaniam. Morning. Vaidyanathan. We have V. Parthasarathi. Yes. Yes, Parthasarathi, you can speak now. Yeah, Subbaram. Subbaram also you can speak. Unmute and share your thoughts. Parthasarathi also can speak. Yes. Okay. So,
hello.
Yes, please go ahead.
Can you hear me, sir?
Absolutely clear.
Good morning, sir. GK, sir.
Please introduce yourself. Please introduce yourself.
It was yet another excellent session, sir, with a very practical explanation and very easy to understand. Thank you for the excellent session once again.
Please introduce yourself for the August gathering.
Yeah.
Your introduction for the August gathering.
Hello.
Yeah, kindly introduce yourself.
Hello.
Please go ahead.
This is Vaidyanathan from Chennai.
Very good morning.
Good morning, Dr. Sir. Sir, we are very much thankful to your this session, and everyone is, no one can deny that we are enjoying the lot. This all practical issues to bring in. I think you must be reading so much, so you want to bring all practical issues with the subject. So it will go. We never go out of our mind. I think everybody should appreciate your efforts and time spent on behalf of us. Everyone is benefited, sir. Thank you very much for your time and patience for giving all input to us. We never forget, sir. We are fortunate to be part of this session, sir. Thank you very much, sir.
Welcome. Thank you. So we have Subbaram. Yes, Subbaram, you can go ahead. You can share your thoughts. Yes. Okay. So I'll request Mr. Sampathji to give closing remarks, please.
Dr. Raju, the seamless flow of the knowledge, as mentioned by the speaker, you would have gone through so much of minute analysis of dissection of every single sentence to highlight about the difference between the various definition clause, whether it is segment reporting or the particular asset held for sale. Both of the topics today, 108 and 105, have been taken as all of them, as mentioned by the other speaker, has got so much to do. Thank you very much. Continue this, and tomorrow is the eagerly waiting to listen to your other session also. My dear friends, daily I am mentioning, please put your reflections or constructive suggestions in the blog spot. 3S Pro blog spot. Thank you, Dr. Rajan, my dear friends.
Thank you, sir. Thank you.